2009, January 15th, investment, part two. Okay. So I mentioned Assurant, which I got from Merrill Whitmer in Barron's. She also recommended Kaiser Aluminum, a stock she had mentioned in the past. The numbers she used, there are only two analysts following it. That usually means something good. And for this year, 275 and 290, and for next year, one says 310 and the other says 460. So let's say $2.50, something lower than both. I don't remember what Whitmer said. So the stock's selling for about 22. So it's 9 times what I think is free cash flow. URS is the stock I picked. It's an infrastructure play. Now, I always loved infrastructure, and it's not because of the Obama infrastructure plan. It's because there was a world build-out. But I had to get out of those until I got back in, I think, in December, very briefly, because the world is in recession. And particularly infrastructure companies tend to have a lot of business in the oil industry. So URS does a lot of work for the Defense Department and for the U.S. government. They manage projects. They also manufacture nuclear power plants. Free cash flow for this company using the minimum estimate of analysts. That is, analysts may have, some may say $5, some may say $2. I use the bottom estimate because it'll probably be worse than the worst analyst's prediction if my idea of the economy comes to pass. But URS is a lot of government stuff. And it's selling probably for 34, 35, about 10 times free cash flow. New York Stock Exchange, NYX, pays 5% dividend. Appears to have a free cash flow roughly in the 240 range, and the stock sells for about 21. So it's selling for about 8.5 times free cash flow. Now, remember, what does a U.S. government bond pay? It pays a free cash flow of 20 times, not 20, 40. It pays $2.50 per 100. This company, if it works out, New York Stock Exchange, not only pays you double what the Treasury does, but they have free cash flow sufficient to provide you with an 11% free cash flow return. Hewlett Packard. I wouldn't buy it at this level, but I will buy it for my niece when it goes lower. They generate a lot of free cash. They have a consulting firm that they acquired which generates free cash. And they have a lot of items that they sell that are cash cows. It's not that I think there's going to be an explosion of demand for computers that they make, but if it gets down to 30, I think it will be a good buy. I think it will be supported by the free cash flow. CSC, Computer Sciences, is a consulting firm, an IT outsource firm They have revenues of about 14 billion. They generate close to $4 in cash, free cash, and it sells for about 36. Doesn't pay a significant dividend, may not pay a dividend at all. I don't know. If it goes down to about 32, I think it would be a good buy. TMO, this is Thermo Fisher, scientific instrument maker. Now this might work in with the Obama plan to update the science facilities in public schools. It's my opinion that blowing up the public schools might be a better contribution. But Thermo Fisher doesn't do that. I happen to own that. I happen to purchase it for my niece's account. At 33.5, it's a little higher than that now. So they sell a lot of things that hospitals need. I think their earnings are not going to be as good as expected. But the lowball version of this is 320. If the shares go down to 32, I would consider it. Cerner. Cerner is a healthcare IT company. They sell software for doctors to use for billing, or perhaps they'll be in prescriptions. Cerner will generate, it appears, close to $3 in free cash. It's too expensive to buy now, but it has been up till now a growth company. Now, none of these things, Cerner is CERN, and I bought 100 shares for my niece. So, what does she own? A company called Stantec, which is about 15 times free cash flow. It's a pure play, STN, pure play infrastructure manager. So I bought it for that reason. She has a little profit in it. It's gone down recently. If it goes down, say to 18, I think I bought it at 16 originally. If it goes down to 16, 17, I think it's a good buy. If URS goes down to 32, goes down 10%, I think it's a good buy. Thermo Fisher goes down 10%, a good buy. Assurant, probably a good buy now. Cerner goes down 10, 15%, a good buy. This market, anything can go down. And I think that there's going to be, I thought at the beginning of the year there was going to be a big sell-off. That's why I was sitting in about 2/3 cash. I had a lot of positions in closed-end bond funds, funds that purchase bonds, take the interest, and then pay it out in dividends to the shareholders. They usually sell at a discount to the face value of their bonds. But they've had big moves. What? Well, it looks like there'll be a part 3.